China said tomorrow, we're not going to use dollars, all of their private sector default. So what it tells you right now is the world doesn't have enough dollars. And so they then have to create more liquidity to get out of this situation. So right now, crypto as an asset class is $2.5 trillion. If I just use the log regression channel of Bitcoin and just project out the growth rates of crypto versus the internet, I'd assume it slows down massively from here. It gets to $100 trillion.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Raoul Pal discusses his exponential age thesis. Raoul will dive deep into why liquidity will resurge into H2 2024, why diversification is dead, financial repression, the fourth turning, and how all these factors impact markets.
Normally, what we see is in US election years, the banana zone starts sometime in the summer, sometimes as late as September, but I think it's starting now. I think crypto price is based this week, and that we should start to see stronger prices going forwards. The banana zone then should accelerate before the US election. Then it probably usually pauses a bit while people get confused over the election, see what happens, and then things go really crazy towards the end of the year. So the banana zone is fully in play for me. People just need to have patience. The world has too much debt. In 2008, we broke the world. Most of the governments around the world got to 100% of GDP in debt, and the banking system failed. We reset interest rates to zero back then, and everybody reset all of their debts on this kind of 3 to 5 year debt refinancing cycle. Now, there's not enough GDP to cover the debts from the private sector and the public sector. So what we found from 2008 onwards, the major central banks just printed money via liquidity, whether it's quantitative easing or other measures, and that printing of money helps pay the interest on the debts. Now, when you print money, you actually debase the money. And when you debase the money, it optically makes asset prices look like they're rising because you're lowering the denominator. So we see every 4 years this cycle where they begin to in year 3, they're starting to add liquidity. Year 4, they're really adding liquidity. Year 5 of the debt cycle, they're still adding liquidity. And then they slow down again, and the cycle keeps repeating. So we get this 3 year of liquidity that rises all assets, but particularly long duration assets like crypto and technology.
As the cryptocurrency market experiences volatility, Michael Saylor, chairman of MicroStrategy, has made a stoic remark in response to Bitcoin's recent price slump. In a tweet that has caught the attention of the crypto community, Saylor stated, 1 BTC to 1 BTC, reiterating a fundamental belief in Bitcoin's enduring value despite market fluctuations. Bitcoin has seen its price fall below the $56,000 mark, continuing a decline that has now extended into its 4th consecutive day. This decline is part of a larger trend that has seen Bitcoin plummet, with over $800 million in bullish crypto bets liquidated throughout the crypto market in one of the heaviest such liquidations since April, according to CoinGlass statistics. By equating 1 Bitcoin to 1 Bitcoin, Saylor is emphasizing the idea that regardless of its dollar valuation at any given moment, the intrinsic value of Bitcoin remains unchanged. Speculators are already scoring the Bitcoin charts to see if closely watched technical levels hold or drop. The cryptocurrency has lost its daily SMA $200 at $57,715, and now attention is shifting to the next significant demand zone. According to crypto analyst Ali, the next key demand wall for Bitcoin is around $47,000, and for the bull run to resume, BTC must close and remain above $61,000.
almost all assets. There's a 97.5% correlation between the NASDAQ and this mechanism of adding liquidity. Crypto's about 87.5% correlation. It's got less correlation because it keeps having these massive exponential moves. So what I did is, looking at that, I realized, okay, we're actually getting poorer by 8% a year, which is the global debasement rate. That's the increase in global liquidity from the major central banks. And therefore, that was our hurdle rate on asset prices, plus the rate of inflation. Let's say global inflation is 4% for easy numbers. So that's 12% we need to make in our investments before we even break even. If not, our future self is poorer because we're not being able to own enough assets in the future because asset prices go up. We don't make enough out of our investments to offset the debasement. So I divided all assets by the global liquidity and found there's only 2 assets that actually outperform it. The rest don't go anywhere. And the 2 assets are technology stocks because they're in a secular bull market. Tomorrow is more digital than today. And crypto, which is the fastest adoption of any technology the world has ever seen. So that's what I base my everything code cycle on. It allows us to understand how prices move over time. It even potentially allows us to forecast prices in advance if we can forecast these liquidity flows because we know what they're refinancing. So it seems a ridiculously easy framework, and it probably is, but it seems to be working. So I'll go with that for now.
Bitcoin's slump saw it dip to under $55,000 as it dropped below its 200-day simple moving average. The downturn comes as Mt. Gox began to repay customers after a decade-long bankruptcy process that should see the return of about $9 billion in Bitcoin. The fresh influx comes as market watchers expect the German government to sell its Bitcoin holdings, which will also weigh on markets. So how bad will the downturn be? This is what the experts say. David Brickell, head of international distribution at FRNT, said it's difficult to say how far Bitcoin will fall. Still, he sees signs the slump may turn around. This latest flush might be sufficient to attract the dip buyers who have been sidelined, but remain longer-term bullish and may well fire the starting gun on the next leg of the bull market. Brickell said, "Bulls will be on the lookout." Rachel Lynn, co-founder and CEO of decentralized crypto derivatives exchange, said the Bitcoin slump is due to market expectations that Mt. Gox users will dump their tokens. But we might see a bounce back if the selling is lower than anticipated. Adam Morgan McCarthy, an analyst at digital finance data company Kaiko, said that Bitcoin liquidity over the summer will play a big role in its price action. Liquidity tends to dry up over the summer months. We can already see this happening. This means there's less support when there's selling pressure and prices can move more sharply. I expect this to continue throughout July, August, and into September. CT Data research analyst Jacob Joseph said there's reason to be bullish, despite the current challenges. He cited growing crypto adoption among institutional players, for instance, via spot Bitcoin exchange-traded funds, and the U.S. election serving as positive catalysts for a rally. In the U.S., both President Joe Biden and prospective Republican nominee Donald Trump have warmed to crypto. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.